Hello and welcome to today's webinar, the Dasgupta Report, Recommendations for Revised Economic Accounting. I'm John Mon, the Research Program Manager here at the Green Growth Knowledge Partnership, and I'm really delighted to see so many of you joining us today, sharing our passion for nature and its contributions to our economic livelihoods. For those who aren't familiar, the Green Growth Knowledge Partnership is a global network of over 75 organizations and thousands of experts from the policy, business, and finance communities. And we're all committed to working together to support a green economy transition. We do this through three global knowledge platforms. The policy-focused Green Growth Knowledge Platform, just recently changed to the Green Policy Platform, the Green Finance Platform, and the Green Industry Platform. I'm also happy to report that we've recently launched what's called the Green Forum, and this is an online community space that provides an opportunity for experts to engage directly with one another through public discussion boards or public-private group discussions in support of a sustainable economy. I encourage you to visit our web platforms online and join our growing community. Today's webinar has been organized together with United Kingdom's Office for National Statistics, or ONS, which co-chairs both the GGKP Expert Group on Natural Capital and the Economic Statistics Working Group. We're working together with a number of international partners, such as Economics for Nature, with a vision of an economic system that restores nature rather than depletes it. We do that by making the value of nature evident in economic planning. And to do that, we use natural capital approaches, such as ecosystem accounting. Our panelists today are working hard to make this vision a reality. We're very fortunate to be joined by experts not only from the UK government, but also from McKinsey, the Times, UCL, the University College London's Institute for Sustainable Resources, and the United Nations Environment Programme World Conservation Monitoring Center, UNEP WCMC, as well as WWF in the UK, and of course, Sir Partha Dasgupta of Cambridge University. We encourage all of the audience members to submit their questions and comments throughout the discussion today. It's really a great opportunity for all of you to engage directly with our distinguished panel. And after the webinar, we'd really appreciate it if you'd take just a few minutes to complete our short survey. That way you can help us shape our future webinars. Also note that today's webinar will be recorded and we'll make it available for you together with the presentations on our website within about 24 hours on ggkp.org/Dasgupta Recommendations. It's now my pleasure to introduce to you today the moderator for the event. This is Tera Allas, who is Director of Research and Economics at McKinsey & Company's UK and Ireland office. She leads McKinsey's research on productivity, government effectiveness, and brings years of experience to today's discussion as a fellow of the UK's Academy of Social Sciences and a trustee of the Royal Economic Society, the National Institute of Economic and Social Research, the Productivity Leadership Group. I could go on and on. But instead of that, why don't I just hand the mic over to Tera? Tera, we're really delighted to have you with us today. And I turn it over to you. Thank you so much.
Thank you very much indeed, and thank you all for joining this afternoon. It's my absolute pleasure on behalf of the Economic Statistics Working Group to welcome you to this seminar on natural capital. We are very lucky to have Sir Partha Dasgupta with us today, but also a number of extremely distinguished panelists and speakers to discuss this important topic of how we should be measuring natural capital, how we envelop into our measurement of prosperity and wealth. I would also like to thank the Green Growth Knowledge Platform for hosting us today, because we've had such enormous interest from all of you in the audience We are able to use their web hosting platform, which is enormously valuable. And of course, I would like to also thank the support, the ONS, Royal Statistical Society, Royal Economic Society, the Society of Professional Economists, and the Economic Statistics Centre of Excellence. As already mentioned, please note that the session will be recorded, and the record will be made available on the GTKP website. The way that the session will work is, first of all, we'll hear from Sir Partha for about 20 minutes. There will be an opportunity to ask 1 or 2 questions after each speaker, but we will also have more time at the end of the seminar to ask questions. We will then hear from 3 respondents, Hilary, Allison, Richard Hayes, and Paul Ekins. After they have spoken, or we've had 1 or 2 questions to each, we will then move on to a panel discussion, which is going to be chaired by Joe Grice. And after the panel, we will still have a couple of minutes for questions and comments from the audience. So do please actively use the chat box to submit your questions. We will try our best to pick up the ones that are getting the most interest, or where there are some common themes arising. I guess without further ado, then, I would like to invite Sir Partha Dasgupta to give his presentation. Sir Partha is the Frank Ramsay Emeritus Professor of Economics at the University of Cambridge, and an author of the recent highly renowned report, The Economics of Biodiversity. Over to you, Sir Partha.
Well, thank you very much. It's a great pleasure, as well as an honor, because I'm speaking to real experts, and I'm an economist, not a statistician. But I have thought about the kinds of issues you are concerned with for a long time. And what I want to do is to present a perspective on some aspects of the review which bear particularly on your concerns. So my commentators can speak from whatever they've taken from the review, and not worry too much as to whether I've deviated from what they may have expected me to say today. Okay? I want to really give you a background for why we do these measurements. And I want to point out to some difficulties that I've personally faced in trying to put the theory to practice in some of the applied work that I've ventured into. Inexpert though they are, one has to try and do it. Okay, there are 2 reasons we are interested in economic accounts. One is we want to ask the question, how are we doing? How is my country doing? How is my community doing? How is the world doing? That's one class of questions we ask, and for that we need some data to get a sense of the answer. And the second kind of question we also ask is, what should we do? What should our community do? What should the nation do? What the world as a whole should do in terms of the kinds of choices that the decision makers have in each of these units. So one is, how are we doing? The other is, what should we do? And it turns out, and I think this is not an insignificant finding, or put it this way, I'm very pleased that I did the finding, as it were, with colleagues. That is, the way we should prepare our accounts for the 2 sets of questions turn out to be the same. In short, we are asking the same question. The first question, how are we doing, is of course the basis of sustainability analysis. We ask, is the economic trajectory we are following or have been following sustainable? Or is the trajectory that we are proposing on with the help of some control variables sustainable? And that's the basis of sustainability analysis. How are we doing? On the other hand, policy analysis is concerned with the latter question. Is this policy a good one? Is there a better one? Is this project a desirable project, or should we seek something else to do with our investment fund? And as I say, the measure that we should use to judge an answer to these 2 questions turned out to be the same, and I've called it inclusive wealth. In a paper with Kenneth Arrow and others, we published some 12 years ago, We called it comprehensive wealth, but I think I've settled on inclusive wealth because United Nations Environment Programme colleagues, friends of mine, chose to use that term. So I'm going to, from now on, call it inclusive wealth. Inclusive wealth is a stock measure of a stock. It's to measure the accounting value of produced capital, human capital, and natural capital. And you might ask what happened to all the other capital goods that we have, which are and services such as, for example, institutions, trust, the financial sector, and so forth. And the answer is that it's convenient to call those enabling capital, measuring which is very difficult, in fact, impossible, I would argue. But they make their presence felt in inclusive wealth through accounting prices. And I'll come back to that in a minute as to what accounting prices really mean in economic terms. So, so we were moving away from flows to stocks, something like a balance sheet. And I'll come back to this issue further. But in order to estimate it, no matter whether you do it explicitly or implicitly, estimating inclusive wealth requires of you to have a model of the economy that you are studying. So it's extremely important to have a formal model in mind. And of course, all governments have them. Treasuries have them. There's a treasury model of the economy. There's a Bank of England model of the economy, and so forth. And these models now, of course, we expect them to have a natural capital component to it. Accounting prices are the marginal value of these assets in inclusive wealth, as it were, the assets that you want to include, marginal values in the sense that you first propose a forecast, economic trajectory on the basis of, let us say, business as usual, just for the sake of argument. It's business as usual, and you want to see whether you ought to shift gear. So you have a forecast, given the model. You then ask, suppose I were to perturb the forecast a little bit. What then would happen? And along the revised trajectory, the perturbed trajectory, you estimate social well-being, and you estimate social well-being along the trajectory in question. And the difference between the two will yield you the set of accounting prices. Now, I'm talking about now pure theory. In application, of course, you look at market prices, try and make some adjustments, and you're more familiar with those methods than I am even. But I want to focus on certain key things that have come up in the review. First of all, even before you hit the idea of inclusive wealth, it pays to recognize that we are over harvesting the biosphere. The biosphere, I'm going to call, is the natural capital component of inclusive wealth, and I want to concentrate a bit on that for the moment. For a variety of reasons, the variety of types of data that the review produces, we are now pretty convinced that we're making excessive demand on the biosphere's goods and services, so much so that the biosphere stock, whether you measure it in quality terms or quantity terms, is shrinking. So the image that you might want to have, and I keep on harping on the fact that we do need a model, a mental model at the least, a formal mathematical model at best. The mental model I have in mind would be something like a gigantic fishery. The biosphere is a gigantic fishery in the sense that it's a regenerative resource, okay, churns away goods and services, but it will shrink if you take more out of the flow than it provides, okay? It's bounded, so you cannot accumulate it to infinity. It's bounded, and it provides these services, and you can tap into it. If the amount that you take out falls less, then it will react. If it falls more, it will also react. And at the moment, it's the falling, if it's greater, is the case that we want to study, where the demand exceeds the supply and the biosphere shrinks. Okay, now think of the biosphere as a capital asset, in which case we have an aggregation problem, of course. You may avoid it by saying, well, like any good applied economist, we think of it as a vector of stocks, ecosystems, if you like, variety of ecosystems, thousands of them, in which case, when I talked about the demand being in excess of supply in the terms of flows, I really meant a vector of such inequalities. Okay, but for conceptual purposes, it makes sense here to think of it as a scalar. In which case, we have a stock and we have a flow of output. The sharpest example of that you're familiar with will be over climate concentration, carbon concentration in the atmosphere. The concentration is a stock, but it's a stock with a negative value at the moment, because at the margin, the stock is a bad news. Okay, so it's a stock, and I'm sort of thinking of pollution as a negative of conservation. Okay, that way the review actually unifies both pollution issues as well as conservation issues. So we have a stock, which is carbon concentration in the atmosphere, and then from that there is a mapping. There's a mapping from the stock to mean temperature, global temperature, and then of course there's a mapping from mean global temperature to all sorts of spatially conditioned things, such as, for example, weather events and so forth. And there's of course noise in the system as well. And from that, there's a mapping to global output. Okay, so if we have to think of the stock as a global public good, or a public bad in this case, in this particular instance. But notice there is a production function involved here. And the production function goes from emissions to absorption to the stock to temperature, suitably modified, to the output possibilities of our economies. Okay, and it's that model which is translated into the idea that perhaps the accounting price of carbon, which we call the social cost, is $40 a ton, $50 a ton, $100 a ton, depending on who you ask, because the models do differ. I want to conclude by suggesting looking at three classes of problems that I've faced in doing applied work. First is, what do we do when a national accountant wants to include a global public good? The atmosphere is a good example. The carbon concentration is a good example. It's maybe, let's suppose, just for the sake of argument, it's $40 a ton. But the fact is, of course, other people are pumping carbon into the atmosphere as well as we. Okay, the share of this, the $40 or $50 that is targeted, is the global price. We now need to convert it into the welfare calculation, therefore the accounting price for the country in question, in this case, UK. Now, in our paper, Arrow and myself and our co-authors, we circulated that paper, by the way. So it was published in 2012, I think. We took the social cost of emissions as being proportional to the size of the economy relative to the world economy. Because remember, if you're pumping carbon into the atmosphere, you don't bear all the losses. Others are bearing the loss too. So you need to deflate the cost from your perspective. And so we did that for the five countries we studied. A second issue that struck us as problematic, but we dealt with it, and it's not really so much a green issue, but then on the other hand, if you want to really think of green issues, you have to embed it in a larger context of inclusive wealth. So it's legitimate to talk about it even at this seminar, which is concerning human capital. Now, there's a huge rich literature on the education side of human capital, and that's the bit of the literature which is really mushroomed in the United States in particular, and you're familiar with that. In the Arrow et al. Paper, we use that framework to estimate the increases in education or human capital in the 5 countries we studied over the period we were studying. By the way, in that paper, we were studying sustainability analysis, not welfare economics. Okay, we are not doing cost-benefit analysis. We were asking, how have the countries done over the 15-year period that we studied? The component of health, the component of human capital which was problematic was health. How do you do that? Now, we did a very crude thing. We used life expectancy at birth as a surrogate for health and asked how far has it increased. Question, how do you value life expectancy or increases in life expectancy? Remember, it's the change which is to be valued. Accounting prices are about changes. Okay. So what we did was to use the value of statistical life, which is, of course, as you know, really rather large, no matter which country you look at, ranging from a couple of million to 10, 15, 20 million dollars. And of course, if you then want to be really refined and look for qualies and dailies, boy, that really becomes quite messy. But we just literally looked at the value of a statistical life. What we found was perhaps not surprising, but to us at the time the numbers came out, was rather stunning. We hadn't quite expected it. We should have expected it by looking at the numbers, which was that over the 15-year period that was in we studied, the averaged over the 15 years, of course, the end point being at 1 and the terminal point being 15 years later. I think it was 2002 or something. We found that the health component literally dominated everything else as a part of inclusive wealth. Not very surprising. So it does make it. The answer is very sensitive to the human capital component. The third aspect problem we faced, which we wanted to handle carefully, was of course total factor productivity change. And we used standard techniques for doing that, but we recognized that there is a very strong reason why conventional models overestimate total factor productivity growth, the residual that is. And the reason it does is that typically models do not account for depreciation of capital, natural capital in particular, in which case, of course, what could be actually a decline in your capital stocks is fed into the model through total factor productivity. So you could actually raise productivity growth by eating into nature, which is extraordinarily dangerous and bad thing to do. But which brings me back to the point where I began, which is it is extremely important to have a proper model of the economy before embarking on these accounting exercises, which I know you all do. But I think the models that we typically used up to now are really flawed, so flawed that they're misleading in a big way. In chapter 4 star of the review, I've produced a model which is a complete model of an economy, and complete in the sense that it tracks a production from input right to the sink. In other words, the residues of output, the model takes very seriously, because Mother Nature has to cope with the residue, our waste products. And it is no good saying, oh, so long as we can make our waste biodegradable, all is well. In fact, all is not well. The classic example of why it is not all well is carbon emissions. That's biodegradable. It is being degraded in the sense it's absorbed by the trees, but on the other by primary producers. But of course, at the moment, we're altering the composition of primary producers in a big way by inflicting more and more of the harm. So it's extremely important to have a complete model which includes pollution of all sorts. And pollution here now means also degradation of natural capital of all sorts. And we do need models of the ecological models of nature going to waste or nature being degraded. That's the production function part, which I was outlining to begin with. It requires a huge amount of work, but I don't think it's something that we shouldn't be frightened of doing. We should remind ourselves of what it was like for Kuznets to have started the gross national product estimates, national income estimates. At that time, he had very little to go on. He made horrendous assumptions in this moves, which would sort of make you squirm, but it was necessary. So I think if we are bold enough, we can do this. But when we do it, we should do it with an intellectual framework that actually picks up what we're doing to the biosphere. Thank you very much.
Thank you so much, Sir Partha, for that incredibly inspiring and wide-ranging discussion, both about the need for measuring these things better, but also the challenges. And I really like your comparison to when we first started measuring GDP. It wasn't that easy either. And we have, of course, gotten to a point where we now know reasonably well how to do it, but constantly still improving. There are a large number of questions, as you would expect, but let me start with a fairly simple one, which I think comes across in a number of different ways, which is, should we just give up on GDP altogether and use a measure of wealth and assets as our guide to how we think about how the economy is doing, or how society is doing, I guess, and also what policies to pursue?
No, I don't think so at all. I don't think we should jettison GDP, because it served the purpose that Kuznets started off with in a big way, which was to try and measure, to try and estimate the level of economic activity. Remember, Kuznets was doing his work during a deep depression, with 20–25% of factories lying idle. People being unemployed. It was extremely important to find to get a sense of the size of the economy, and that it does for short-run macroeconomic management. I think GDP is indispensable. That's fine. The problem was to translate that to long-term issues. And how are we doing is I started with how are we doing, but I immediately shifted it to sustainability analysis. Sustainability analysis is concerned with the long run. It says, how are we doing relative to 10 years ago, 20 years ago? What are we likely to be like in 2050, 60, and so forth? For that, GDP is not going to be good, at least for assessment purposes, or certainly for policy. I should say, just to remind you, that we are used to inclusive wealth. This is not a new idea. It's part of our welfare lingo. Why? Because when you do project appraisal, project evaluation, the criterion that we've always used is net present value. And net present, and of course now we say including, you should include nature when you estimate net present value, okay, in your costing of nature and so forth. But net present value is a stock, is the change to a stock that is being made by the project in question, because you're summing up flows, discounted way maybe, but the fact is it's a sum. So it's a sum of flows, so it's a stock. And so we can show, and the review proves that in fact net present value of a project, if done correctly, is an expression of the change into inclusive wealth that the project brings about. And so we have been using it for policy purposes all the while. It's just that for sustainability analysis, it hadn't been put into practice, and the Arrow paper tried to do that. And UNEP, of course, has been much involved in it. There was a 2012 report, 2014 report, and Managi and Kumar's book, 2018, carried even further.
Thank you. That's really clear, and thank you for that explanation. It's very important to keep that in mind and learn those lessons. I guess that challenges always have been then pricing in all of those externalities even in your NPV calculation. But as you implied, you know, that there's work to be done, but it doesn't mean we shouldn't start now. And for many things like carbon emissions, we already have decent shadow prices that we can use. I will ask you one other question, which is a little bit more controversial and more about policy, but there's a question here about, is green growth enough, or should we be aiming for degrowth or a steady state economy? In other words, do you see a world in which we can continue to grow within the planet's limits, or whether at some point we're looking at actually not growing anymore from an economic perspective?
A very nice question, and of course it's something that we all, I think everybody speculates on, goes that saying. The review, I think we've taken I took the right attitude in the review. It's an honest one in the sense that I'm a sort of hard-boiled economist. So for me, it's not so much having a picture of it, what kind of a world I want to live in, whether a steady state one or a wobbly one or a fluctuating one, who knows? It's not that. What I try and do is to identify the errors that we make on account of incomplete, imperfect institutions. And you identify imperfect institutions from a formal model to see where the leakages are in institutions, to see whether you can bring them together. Then, once that happens, if it's possible, what emerges is something you and I, or at least I, can't predict. So I can't imagine whether it will be growth for another 20 years, followed by tailoring off, or the kind of lifestyles we will all have. I have no idea how we're going to respond. All I can say is that if there is an open access resource sitting there like the open oceans, we ought to do something about charging rents for its use. And the review does that. It says if the tropical rainforests are a global public good, which all climate scientists say are, because it absorbs carbon, it's a global public good, but they happen to be within national jurisdictions, then economics says that we ought to find a way to subsidize these countries to preserve them, because we're all benefiting from its preservations. So the cost should not be borne exclusively by the countries in question. Now, these are massive institutional changes, and never mind all the $4 to $6 trillion of subsidies we are actually making to beat up on nature annually through all the energy subsidies and so forth that we're making. Lifting those, that's another set of institutional changes. Now, if we bring those in and try and cost these the alternative uses, as we as statisticians you're concerned with, what the world will look like is not for you to say, or at least not for me to say, because we'll shift, we'll change. We are flexible people. If the cost goes up in one direction and something else becomes cheaper, entrepreneurs will try and gravitate their investment in research R&D in a direction which will save on the expensive factors. And of course, it's just the reverse has been happening. Because nature is cheap, our technological advances have been predatory. It's not that technology is bad, but we just have bad technologies because we've got lousy institutions. I mean, they're all hostile to nature. So I don't know to answer the question. It's a darn good question, but I wouldn't have the guts to do it. All I can say is we can clean up our act. What will happen after that can't be bad. It'll be better than where we are.
Thank you very much indeed. That's very clear that institutions need reform and that we're looking at a dynamic system. So it's really impossible to fully predict what might happen. But there's some guardrails, obviously, that need to be put in place. That's super helpful and informative. And there's many more questions people have put in, but we will come back to them at the end of the session. I now have the privilege to invite Hilary Allison, the head of program for ecosystem assessment at the United Nations Environment Programme World Conservation Monitoring Centre, to share her thoughts on this topic. Over to you, Hilary.
Thank you very much indeed, Tera, and good morning, good afternoon and good evening to all of you. I'm very pleased and privileged to be asked to give some observations at this event today. So I'm going to give some practical reflections on ecosystem assessments, which are a process which countries are increasingly undertaking to understand the state and the future trends of their natural capital, and also on the data considerations underpinning those assessments, which are of course directly relevant to environmental accounting. Next slide, please. So just a very quick roadmap. I'm going to provide a few general observations and in particular a super quick primer on ecosystem assessments. And then I want to focus the bulk of the talk on data needs through a number of different perspectives. So next slide, please. And if you can click through the bullets, that would be fantastic. There are 3 of them. So I looked through the Dasgupta review, and these 3 quotes jumped out at me really. They encapsulate, I think, some of the challenges that we face in relation to biodiversity data. How best to deal with data relating to the whole continuum of life, from whole ecosystems, complex interactions of species and processes, and the species themselves, and then the genes within those species. So we have this continuum of life. And then we also have a challenge as to what kind of data we need to collect. Are we interested in the data about abundance, or about occurrence, or about distribution, or in fact all of these things combined, and indeed more categories still? So in terms of ecosystem assessments, all of these questions are context dependent. Next slide, please. So what is an ecosystem assessment? Very quickly, for those of you who are not perhaps so familiar, these things are effectively an evaluation of knowledge. That's a very key phrase. Assessments are not about generating brand new data and about original research, but they are about producing syntheses and new insights from existing data into the drivers, impacts and responses to changes in biodiversity and ecosystem services. Next slide, please. So just a little bit more to unpack that. So assessments are really demand driven. They represent a meeting between science and policy. They're about communicating complex information to decision makers. They are about addressing key policy questions, because scientists understand the data and knowledge that underpin their specialisms, but they don't necessarily have a full insight into policy questions which their data may be able to answer. But on the other hand, policymakers are very familiar with the policy-related questions, but they don't necessarily understand the full range of constraints and complexities inherent in the data which they hope will answer them. So, as I mentioned, assessments are about synthesis. They can be geographic or thematic in nature, and very often they are forward-looking to help us understand what the future could look like under different scenarios. And there have been hundreds of ecosystem assessments published to date. Today, I'm going to talk mainly about national level, geographically focused ecosystem assessments, although the Dasgupta review clearly focuses a great deal of time on the two global groundbreaking assessments published in 2005 and 2019. Next slide, please. I just wanted to mention the UK's own ecosystem assessment. The UK was a very early adopter of producing such an assessment, and it's very interesting that the policy cascade from that assessment is still playing out today, 10 years on. It led directly, for example, to the establishment of the Natural Capital Committee. I don't have time to talk about that policy cascade, but it is fascinating, and we can perhaps talk more in due course. Next slide, please. There are a couple of key conclusions around biodiversity data which came out of the UK's own NEA. The first one was that actually, certainly for the UK, we have enough information to manage our ecosystems and to make decisions about them. But the second one, if you can just click forward, please, is about the relationship of a healthy environment to the health of humans. I mean, we've discovered a lot more about this in the past year with COVID-19, but there are still some gaps remaining. Next, please. So just a quick word about UNEP WCMC. We provide a lot of support to countries around the world working on their own national ecosystem assessments. This is not just in the field of data, I should say, and on the right-hand side of the slide, you can see a whole series of areas where we provide expertise. Next slide, please. But just to show you that we're currently working with 11 countries and providing actual on the ground support to them, not actually doing the assessments, but actually supporting in a technical and advisory capacity. And there are many other countries around the world, as you can see from the bottom of the slide, which have already completed their own national ecosystem assessments. Next slide, please. And just quickly, before I focus the rest of my talk on data needs, I wanted to just highlight the sort of continuum from data itself, the raw observations and measurements that are analysed, through to information, which processes that data to give it meaning, through to knowledge in terms of understanding, and then applying that knowledge to better decisions. And this is quite a nice little cartoon that was drawn a few years ago at a workshop we were at, and it just exemplifies the process from data through to decisions, which is what ecosystem assessments are ultimately about. Next slide, please. So just thinking now about data needs, I think the key point I want to make is that data needs are driven by the policy questions which an assessment is seeking to address. So a policy question could be, for example, what are the drivers of biodiversity loss for coastal ecosystems in our country? Or how can biodiversity and ecosystem services contribute to transformational economic change? So there are some, depending on what circumstances are inherent in the country, policy questions will vary, and therefore the data needs will vary. And these are important questions which form part of the scoping phase of assessments. And the snakes and ladders diagram you can see on the right is from the IPBES guide to assessments. IPBES is the biodiversity equivalent, if you like, of the IPCC, which actually prescribes a very helpful and iterative and stakeholder-based process of preparing assessments. Next slide, please. Next slide, please. Thank you. So thinking about some of the principles behind data, it's very important that in undertaking an assessment, that data should be free to use, should be subject to open access, as free from bias as possible in the sense that there's no paywall. It should be easy to interpret, particularly for decision makers and policymakers. There should be complete transparency about levels of uncertainty. The IPBES assessments make the level of uncertainty linked with statements very clear. The data should be fully referenced and documented so that it can be returned to if further analysis is required in the future. Next slide, please. So very often an assessment will require some basic building blocks of data. I've divided this into sort of temporal data and spatial data. From a temporal point of view, you need baselines and trends in order to be able to not only understand where you've come from in terms of the historical picture, but also if you're thinking about modeling future scenarios to look at different policy assumptions or different futures which data under a business as usual scenario might suggest, and therefore what responses might be required. And you will probably very likely need spatial data. You will need some basic information on key ecosystems within a country, forests, peatlands, lakes, rivers, and so on. And you'll need to understand something about how much there is, where it is, how healthy it is, what threats are the ecosystems under, and what services do they provide. Next, please. So an ecosystem assessment is often quite a data-hungry process. And it's inevitable that traditional data sources might not actually cover all the needs that you require. And it's important to actually remember that there are multiple sources, not just tables and tables and tables of numbers that can be drawn upon in order to inform the analyses that are undertaken in an assessment. And I just highlight here 3 or 4 categories of alternative different kinds of sources of data which are increasingly being relied upon to support assessments. And you can read a lot more about that in one of the chapters in Global Environment Outlook 6. So here we're talking about qualitative data. We're talking about data collected by citizens, which is then verified and before it's analysed. And we're talking about the use of remote sensing data, where large data volumes can be generated at relatively low cost, providing you have the capacity to analyse them. Next, please. I think another point I wanted to make about data needs is that actually the sources of indigenous and local knowledge are really important, and IPBES is extremely strong on this dimension of assessments. At least a quarter of the globe is owned and managed, used or occupied by indigenous peoples who have different perspectives and different knowledge systems from traditional Western science. And it's important to bring all of these different kinds of data together in an assessment. So we should not be closed in terms of the sources of data that we look to. Next, please. So another strong area that comes through in terms of assessments is the need for good sound indicators. Partly, this is also partly relevant to the general issue of accounting, because many of the data sets that indicators rely on are themselves susceptible to being used in formal environmental accounting systems. And Indicators are a very interesting tool to use within an assessment, because you can ask a bigger, broader question than just the direct subject of the indicator. So an indicator of forest cover, percentage of land cover, which is forest, could be the indicator to a number of different policy questions. Not just how much forest do we have, but is illegal logging still increases? Are forest conservation policies working? So if we're able to provide good, clear indicators in assessments, we can actually answer multiple questions potentially at the same time. Next, please. I just want to say a very quick word about data gaps. There are, as I alluded to earlier, a number of gaps in our knowledge and of biodiversity, particularly the link between social values of well-being and human health, and how those intersect with ecosystem services. We are particularly poor on a lot of ocean biodiversity data at both species and ecosystem levels, and we really know remarkably little that is at least accessible to policymakers about genetic level diversity. So these are key knowledge gaps that exist even for those preparing assessments. Next slide, please. Our experience is that working with countries, they very much want to use their own national data as far as possible. It gives confidence and ownership of the assessments, but there will be kinds of data that cannot be necessarily produced in country, and global data products can supplement these sources. And I've just listed a number here. This is not an exclusive list by any means, but here are some global data sets which are freely available to use and to support national ecosystem assessments. Right, I think this is the final slide. So if I can just move, if we can just move on, thank you. I just wanted to leave you with three very quick messages, key messages. Data needs and gaps can be addressed by multiple sources. Assessments don't generate new data of themselves, but they are great at providing new analyses and new insights through synthesis of existing data. And very much the most important point, data needs are entirely dependent on the policy questions which the ecosystem assessment is addressing, which needs to be established right at the start of the process. So data is very much context specific. And thank you very much for your attention.
Thank you, Hilary, for that incredibly comprehensive canter through a lot of the very important data issues in what is a very complex topic. And of course, with lots of data needs and lots of challenges in putting all those data together. But I think your main message around knowing what the question is incredibly helpful for policymakers out there and people who are applying these approaches. We're running a little bit late in terms of schedule, but there is one question that I think builds on what Sir Partha was saying that I'd like to ask you, and that has come through from the audience, which is, when the UK does its national ecosystem assessment, do we take into account the impact on other nations' ecosystems? And if so, how? Or if we don't, what are the implications?
That's a very good question. I mean, the UK has only done one national ecosystem assessment back in 2011. And from memory, I don't recall that it focused particularly on the sort of global connections of sort of policy decisions on the sort of environments and ecosystems of other countries. But I think that's certainly a theme that has been increasingly recognised over the last 10 years, the sort of interconnectedness of the sort of global economy, and that our decisions around food are directly related to deforestation overseas. I read something in the news today that a single individual's food consumption in a year is directly responsible for the deforestation or the removal of 4 trees overseas. So if you multiply that by millions, you can see where the pressures come because of links with meat consumption and various commodities. So it wasn't particularly well explored in the UK NEA, to my knowledge, as far as I recall, but it is increasingly well understood that we are definitely in a globally connected age, and our decisions have huge implications for those overseas and their quality of their natural environment.
Thank you, that's great and really, really excellent answer. We will now move on to hear from Richard Hayes, the Deputy Chief Economic Advisor at the Office for National Statistics.
Hello, and thank you. It's a huge privilege to have the opportunity to talk to you today. Let's move on to the next slide.
Richard, I'm afraid we can't hear you. So I'm wondering if you could click on the microphone button or the unmute button. Thank you all for your patience. Richard is just changing his microphone, so hopefully we'll be able to. Yes, now we can hear you.
Hello, can you hear me?
Yes, Richard, go ahead. Thank you.
Apologies about that. I have no idea what just happened there. Let's speed up. So, as I was trying to say to you, this is a complex picture across government. There's lots of agencies involved in data collection. And this obviously reflects the importance of this topic and the range of activity which is involved. If we move on to the next slide, it's important to say that here at the ONS, we're very much looking at this in terms of how this fits with the journey that we're on as an organisation to try and make UK statistical landscape more reflective and more understanding of sustainability issues. And we have recently realigned our strategic objectives to better measure this, reflecting the need to achieve net zero and environmental goals. But thinking very much across that landscape, across government, there's clearly a need for the ONS to play different roles in different places in terms of its ability to lead, to convene, or to support activity in this space. And key within this, I think, is looking at how we can bring together different data sets from different sources to begin to meet some of the challenge that Partha has set. If we move on to the next slide. And at the heart of this is increasingly our need and our efforts to try to bring together different areas of statistics and recognise the interlinkages which are absolutely at the heart of the report. The UN's Sustainable Development Goals provide us a framework for thinking about how we capture these, but alongside this, we continue to look at, from the national perspective, at the range of economic, environmental and social information that we have to continue to challenge ourselves and to think about ways to better present and better combine this data to meet this rising challenge. So if we move on to the next slide. Now, there is, to a degree, a challenge here in terms of established practices, which obviously deliver different sets of information, often in quite a compartmentalized fashion. These bring clear advantages in terms of very clear definitions and mechanisms for producing this data. But there's a little quote there from the former chief economist at the OECD that if all the exciting innovations happening in the satellite accounts, the environmental accounts and household accounts, what does that mean for the national accounts in terms of economic decision making? And the key point here that we have to make is that it has to play a role in part of this family of different sets of measures. And that we can use these range of different measures to support each other and to provide some of the coherency and some of the challenge to bring information together in a way which addresses the challenges which we are facing. And importantly, we're able to do that because these frameworks are designed to be coherent. Now, in terms of that question that was asked earlier, do we still need GDP? Yes, I think we still do. It serves a particular policy need. In the same way that we still need the environmental accounts, we still need those information to think about those questions, but we increasingly need to think about ways to pull these data together. So if we just move on to the next slide. Now, we're quite lucky here in that following on for the ecosystem assessment, there's then been a period of in-depth work around ecosystem accounts and natural capital accounting, which the UK has worked to deliver in line with the system of economic accounts. These are a range of materials that we have been able to produce and that we feel place us as a world leader in terms of our statistical building blocks that we have available. But effectively, the challenge now is moving from having created the Lego bricks to thinking about how you can combine them together. So if we move forward again, we need to move ourselves on to the next set of challenges. So globally, we've been working with other nations and other international bodies to agree methods for these series, which are consistent and coherent across the piece, and then domestically producing data around these. But increasingly, as I say, we need to think about ways to bring them together and then to fill in remaining conceptual and empirical gaps. So let's keep going. So one of the areas that we are looking forward to be able to deliver in the next year or so is to bring together a single articulation of total capital stock, very much I think in line with the idea that Partha was putting together around inclusive wealth, to bring together a picture of productive capital as currently captured in the national accounts alongside environmental assets and our estimates of human capital. I'm going to keep moving because of time. Let's move to the next slide. And we are going to, in the next month or so, publish a paper on some experimental work via the Economic Statistics Centre of Excellence discussion paper series, looking at the potential to go beyond these as individual measures, but thinking about if they are coherent, can you put them together to tell yourself something interesting about both the flows of benefits which are arriving from these different series, as well as capturing the impact of depreciation and depletion of these particular asset types. I hope you'll see more of this very shortly. Next slide. Now, the key challenge here is that all of these series are based on market prices or within the environmental accounts as close to market prices as possible. And that's obviously a quite significant difference to the accounting prices which Partha has described. And here I think we recognise that there's a challenge that we continue to think about, and indeed anyone who has ideas in this space, do feel free to contact us around how we are able to both, as Partha has described, create these accounting prices, but also to think about creating time series of them. Much of the data that we're thinking about, we need to be able to compare periods of time, temporal considerations, as Allison described, and therefore that's going to need us to be able to account these produce accounting prices or think about how we use our existing data at different points in time. Let's keep going on to the last slide. So in conclusion, I think the ONS's view is that we have built many of the essential building blocks to begin to think about this analysis, and we want to shortly publish some experimental work on how to integrate this data, as well as continue to work with other international organizations and NSIs to test how the existing frameworks can be updated to take account of these challenges. But there's still work particularly to be done around this question of accounting prices. I'll pause there. Thank you.
Thank you very much, Richard, for that great explanation. And it's incredibly encouraging to hear that the ONS is doing this work and pursuing all those difficult questions and answering them one at a time. Now, in the interest of time, we're going to go straight on to Paul's presentation. If you do have questions for Richard and Paul, then do put them in the chat box and we will pick them up either during the panel discussion that Joe will chair or at the end when we have our Q&A session. So for our final presentation, I'm going to turn to Paul Ekins, Professor of Resources and Environment Policy at the UCL Institute for Sustainable Resources. Thank you very much, Paul, for joining us, and over to you.
Yes, hello everyone, and thank you very much, Tera, for the introduction. And I'm going to talk to you a bit about the work that the Green Growth Knowledge Partnership has been doing in the area of natural capital. John told you a little bit about GGKP. This natural capital work really comes from a project, and with that, the GGKP set up an expert working group on natural capital, and it's co-chaired by Joe Grice, who you'll hear from in a minute, and myself. And we have produced a number of papers. Next slide, please. So these papers were looking at three things: the need for data, and Hilary has covered a lot of the relevant territory there, so I shall skip through that quite quickly. The need for measurement frameworks and targets, and of course Richard has been talking about that in the context of the accounts, and the need for policy relevance, and that's something that comes through very strongly, I found, in the Dasgupta review. Next slide, please. So these are the papers that we produced. You can find them all at this URL link, and I know the slides are going to be circulated. On the need for data, there was a paper there of whom James Vorst, who was one of the members of the working group, is also a colleague, as you can see, of Hilary's from WCMC. And I'm going to talk about that first, and then come on to the measurement frameworks and targets, and then onto policy relevance. So next slide, please. Now, Hilary's covered a lot of this, so I'm going to let you just pass your eyes over some of these bullet points. There are information gaps, which he was talking about. Lots of things that we would like to be able to do, which we can't do. Something she didn't talk so much about is the user uptake gaps, which is that we found, or rather this paper found, that actually policymakers are not using all the information that there is. There are shortages of information, but actually over the last 20 years or so, people have been generating vast quantities of data. And then perhaps most importantly, if we look at the recommendations down on the right-hand side, how to take these things forward, to do something that Richard was talking about, to incorporate socioeconomic data sets into natural capital platforms and tools, to get a more explicit linkage of data sets and international obligations. There's a whole raft of international treaties and internationally agreed environmental goals. And very often the data sets don't speak terribly specifically to those. To get a systematic program going to focus on the outstanding data needs, to get greater engagement between the big data providers. And of course, data is exploding with satellite data and all sorts of remote sensing data, etc. But very often these aren't very well joined up, and so the data is not as usable as it might be. And then to increase capacity by, again, pooling and integrating data and having international communities of practice who can share their data together. Next slide, please. So that's all I'm going to say about data for the moment. Do read the paper if you're wanting to take this further, because it's got lots of really good information in it. So the second topic is measuring nature's contribution to economic development. And very helpfully, a lot of the items on the left-hand side have been covered by previous speakers. So we've got the basic statistics, the data that Hilary was talking about. We've got the accounts and the SEER, the system of environmental economic accounting, which has made great strides forward recently by agreeing it's the way it treats ecosystem accounting, which has been one of the most difficult and complex areas. And then out of the accounts, you extract indicators, which Hilary also talked a bit about, which support decision-making and policy coherence and are of obvious interest to government officials, policy analysts, etc. And then up at the top, we have the key indicators. And obviously in the economic realm, one of the key indicators is GDP, which we had a bit of a discussion about. The Dasgupta review is recommending that it should also be inclusive wealth. And that really is, those indicators there are to answer the question of, is society going in the wrong direction? And certainly with regard to the environment, because we haven't been measuring nature's contribution to economic development, the answer is very much that society is not going in the right direction, despite the fact that GDP continues to grow. Next slide, please. So one of the tasks in which I was involved in this piece of work was to develop a natural capital indicator framework. We were rather surprised when we had a look at this as an expert group to find that there was no indicator framework that would systematically define how you should measure natural capital and carry that through. Of course, it is done. It is done in the publications of Inclusive Wealth that Sir Partha mentioned in his presentation. It is done in the splendid Comprehensive Wealth publication for Canada, published a couple of years back by the International Institute for Sustainable Development. But it's not anywhere as clearly defined as you will find in the various accounting frameworks that Richard was talking about, or the SEER and the ecosystem accounts there. And it's quite theoretically and conceptually quite simple. We start with indicators of the extent, condition, and economic value of ecosystem and commodity natural capital assets. So that's the asset valuation, and there are lots of different types of indicators down on the left there that we will need in order to express those values. That capital stock will produce flows. So we're now at the little orange square in the middle, and those are indicators of the biophysical flows from natural capital. And then that produces outputs. Sometimes those outputs can be measured in monetary terms. Sometimes they have to be considered mainly in physical terms. The situation is complicated by this pink box at the bottom, because a lot of natural capital is productive or is made more productive by human inputs, and obviously agriculture is a very good example of that. Food comes from natural capital in the sense that it's the product of soil and climate and water, etc. But humans play a very large role in that, and in order to get to the value of the natural capital, you have to, or the value of the outputs, you have to take into account the human inputs as well. I've probably said enough about that, I hope, to tickle your interest. That framework has also been published, so you can look up the journal Ecosystem Services to see a little more detail of that. Next slide, please. And then we arrive at a paper that was produced by Anil Markandia, and that started off from saying that the world now has highly aspirational targets, the Sustainable Development Goals, which have already been mentioned, and they give us targets to aim for 2030. And Anil's question, and I have to pay tribute to Anil as one of the really fathers of the whole natural capital concept. He's been working in this area for very many years, much longer than me, for example. We've got down on the left-hand side of his table there, these are the Sustainable Development Goals. They rely on natural capital, and you can see the various kinds of natural capital that these goals rely on. There isn't enough of it. As Partha was saying, we have been relentlessly depleting our natural capital over many years. So in order to reach these Sustainable Development Goals, we will need to restore natural capital. And Anil's question was, by how much do we need to restore this natural capital in order to meet and reach the Sustainable Development Goals that the world as a whole has signed up to by 2030? And you can see then in the estimation column the various methodologies that Anil has been using in order to arrive at those estimations and the data sources from which those estimations come. Next slide, please. And here we have the answers, the results from that. So you can see the source of the natural capital gap down on the left-hand side. You can see the services that this natural capital provides and that we need more of. And then the two numerical columns on the right, we have an LB, a lower bound, and an upper bound. And you'll see that those numbers differ pretty substantially in the totals at the bottom. So that's 31.9 trillion US dollars and or 86.9 trillions of US dollars. And the higher number of that, of course, is higher than the world's GDP at the moment. And if we look at those values, that, of course, is a big problem with those kinds of calculations, because there's an enormous variation between them. And those difficulties of valuing these ecosystem services have been one of the things, obviously, that accountants and others have been focusing on for quite a long time. Next slide, please. And this gives you where these natural capital gaps come about from. So you've got up in the left, the top left natural capital gap by sector, and that's the lower bounds. And there you've got the bottom one is the natural capital gap by sector by upper bounds, and you've seen degraded land, water pollution, greenhouse gas emissions, etc. Absolutely fascinating results. But again, you can see that the lower bound and the upper bound differ not just in their extent, but also in the sort of the ranking that they give to these different natural capital sectors. Next slide, please. That issue of targets is absolutely fascinating. I came across this paper recently, published in Science. One of the co-authors was my late Dili, lamented colleague, Georgina Mace, and they, in a way, were envious of the 2-degree target that we have for climate change and wanted to establish a similar kind of target in the biodiversity and extinction field. They suggested that perhaps the target should be 10 extinctions per million species years, which would be already 10 times more than the historical record you can see over here on the left, whereas current rates are probably 1,000 or more. I was fascinated to see the Dasgupta Review's assessment of that particular proposal. I have to say they weren't particularly enthusiastic about it because of the huge uncertainties that still exist about species extinction rates, and they recommended more of a focus on habitat destruction. So a really interesting debate going on there in the scientific community. Next slide, please. So the use of natural capital in policy, my last topic. We did a literature search, as you'd expect, and we discovered that in recent years there have indeed been far more publications on natural capital. The early ones started back in 1989, and those of you who are as old as I am will remember that was the year of the publication of Blueprint for a Green Economy. David Pearce and Anil Mankhania among two of the authors. They mentioned natural capital very much in that publication, and the number of publications has increased, especially, of course, in the grey literature, which are the grey filled bars, as opposed to the academic literature in the white bars. Next slide, please. So we analysed this literature, and particularly though part of the literature. Can we go back one, please? You've just gone on 2 slides. Thank you. Particularly that part of the literature that looked how natural capital analysis had been used in policy. And we found that, yes, it has been used quite a lot. used in relation to 22 countries, most often in relation to ecosystems, but there's very little of evaluation as to how effective that use has been. And in fact, we only discovered 2 papers that had particularly looked into how useful decision makers had found that data. Next slide, please. So our conclusion was that the impact of natural capital information on government decision making is profoundly underreported. So it needs to be reported much more. And there's an acute knowledge gap as to the specific impacts of natural capital indicators on decision making. And the public evidence base, as with many of those papers, is dominated by reports of opportunities for impact, but much less evidence of real impact reported. And my last slide then, next slide please, looks a bit at those 2 evaluations that we found that did report on the policy results from natural capital. And you can see by looking down those bullet points that it's difficult. Institutional governance and cultural contexts are critically important, and of course they vary, not just country by country, they can vary community by community. It's difficult to assess the impacts of natural capital projects on particular ecosystem services. The way in which natural capital produces ecosystem services is particularly complicated and tied up with all sorts of things like weather and climate, soil structures, etc., etc. These natural capital interventions and evaluations are complex, time-consuming and expensive, and they involve intensive stakeholder participation. And anyone who's tried to carry those out know that that means that these projects cost a lot of money, and of course you have to get them funded. Sustainable resource management is easier where ecosystem services demonstrably result in increased financial returns, because obviously then people have a monetary incentive to undertake them. But as we know, a lot of the returns from ecosystem services are not financial, and of course the danger is that those then get overlooked. The money values associated with non-market services can be uncertain, and it's difficult to associate them with specific beneficiaries, and therefore they don't perceive them to be strongly in their self-interest. And in contrast, the opportunity costs of environmental protection, in other words, not destroying pieces of the environment that people have an economic incentive to destroy, may fall on powerful interests who will oppose them. And the financial resources needed for investment are real money, often coming from scarce public resources. And the complexity of natural capital interventions can make these difficult to justify. And when I was looking through these 2 papers, I thought, well, there, in a nutshell, you have the environmental problem. That's why we continue to destroy the natural environment, despite the fact that it's against all our best interests to do so. Thanks very much.
Thank you very much, Paul, indeed, for that presentation and, laying out both the promise of doing this measurement and you really using it for policy analysis and decision making, but also the challenges. We are now going to move on to the panel discussion, which Joe Grice is going to chair. Joe is the co-chair of the Green Knowledge Platform Expert Group on Natural Capital and is a key force behind organizing this seminar today. Joe is going to be joined by Karen Ellis, the Director of Sustainable Economy at the WWF-UK, by Philip Aldrick, the Economics Editor at The Times, and John Curnow, Chief Economist at DEFRA, the UK's Environment Ministry. So Joe, over to you.
Well, thank you very much. I've learned a lot already from the presentations. It's been fascinating. We've faced really with a clear call from Partha that we need to change the way we think about accounting for the economy, the way we measure success and failure for that matter. That seemed to be very cogent. And I think what's now not an unfamiliar line about GDP is useful in its own terms, but probably not enough for what we really need to think about in public policy terms. We've also had some interesting material about what's happening to generate data. And I think it's true to say there's a lot of activity, but it seems at the moment we're in a sort of chaotic phase not chaotic in the sense of incompetent, but chaotic in the sense of it's 1,000 flowers bloom stage. Should we continue with 1,000 flowers blooming, or does someone need to sort of grab this by the scruff of the neck? And then, as Hilary and others reminded us, we're not doing this data stuff for its own purposes. We're doing sort of the linkages to policy and to decision making. So at the back of my mind is, first of all, how do we get this information into decision making and into public debate? Secondly, what do we now need to do? So what needs to happen now in this agenda, and who needs to do it? So we don't just have another very good report that sits on the shelf gathering dust, but what needs to happen? So Karen, I wonder if I could turn to you first, and what's your take on this?
Great, thank you very much. So first of all, I wanted to say I think it's absolutely great that so much progress is being made on natural capital accounts and metrics. This is really challenging stuff, but really important. But I also wanted to be a bit provocative and pose two challenges really, and I think this builds on what Joe's just said. First, to say that getting natural capital accounts right is obviously really important, but it's also pretty difficult, and you really don't need a full and robust set of natural capital accounts or an assessment of total stocks to start incorporating nature into economic decision making. And we obviously need to start doing that much more right now and don't need to wait for these accounts to be perfected. And the second challenge is really that I worry that sometimes there's an assumption that once data is readily available, it will inevitably get used in decision making, which I don't think we can rely on at all. And that's why we're still heading in completely the wrong direction, despite all of the efforts on this agenda to date, in terms of heading towards those planetary boundaries and beyond. So I wanted to focus my comments more broadly on how we get nature into economic decision making. And there were two broad issues I wanted to bring out. First of all, it's incredibly important to make data and metrics easy to produce and access and available in decision relevant tools. And secondly, I think we need to be putting much more effort into creating decision making frameworks in government and in the private sector that require this data and are incentivizing the use of it. So on the first point, making data easy to use and accessible. The challenge with a lot of this is how difficult it is to produce natural capital accounts or ecosystem service assessments. You know, the NEA was done years ago, haven't done one since because it's such a big job. However, there are some great new data sets coming online now, things like remote sensing data using satellites, for example, which help us to assess things it will be much harder to measure any other way, such as land cover and deforestation. And that's real-time data, it's updated constantly. And there's lots of new developments in this area, which we summarised in a report called Sustainability and Satellites a little while back. And in terms of providing decision-relevant tools, I wanted to give you an example based on our own experience at WWF. One of the things we've done is to work with academics to create a CGE model to assess the economic impact of different future natural capital scenarios at the global and national level. We call that the Global Futures Model. And what it did for the first time was link ecosystem service assessment models to global trade model called GTAP. And so it does pick up the impact of natural capital changes in one country on others through its impact on the country's economic production and trade patterns. So this model was pretty groundbreaking and was picked up by the World Bank and by the Treasury to inform the Dasgupta review. Now, first of all, it's really relevant in terms of assessing the materiality or relative importance of different natural capital related risks and informing economic decision makers who want to know how to prioritise their investment in natural capital. But the big challenge with it is it's a big, complicated model. It's not that easy to use or do analysis with unless you're a trained CGE modeler. So one of the things we've done with it is to make the information it contains more accessible to users by creating an index, which we call the Climate and Nature Sovereign Risk Index, which can tell you which countries are likely to face environment-related risks to their economy and hence to their public finances and their ability to repay sovereign debt. Now, this index also uses a lot of the satellite data I mentioned previously, and we developed it with 91, previously known as Investec, the asset manager. So this has created a much easier to use tool that can give you an immediate answer of direct relevance to sovereign lenders and ministries of finance. And both of these tools are now being developed further by other stakeholders, including 91 and also Bloomberg. So this is what's really needed to think about how to turn this kind of data into decision relevant tools. And the second point is about creating decision-making frameworks that require the input of this data. So the Dasgupta review, as we've heard, recommended the adoption of the inclusive wealth metric as a measure of economic success alongside GDP, and we very much support that. But the question is how to actually incorporate that into decision-making when GDP is still very much the default metric that everyone looks at, both in government and in the media and in wider society. So we recommended a while ago, actually, that government should build natural capital accounts, which they've been producing for a while now, into their annual budget reports or regular fiscal publications, along with analysis and commentary on the trends that shows, the risks it identifies, and the policies that have been adopted to address those risks. So that's one way of getting more attention onto these kinds of other metrics of economic performance and making it part of the mainstream economic debate. Another way is to build it into government spending decisions. So we've been promoting in the UK the idea of a net zero test for government spending, which basically assesses the overall emissions impacts of a package of government spending measures. Even assessing the emissions impacts of spending decisions turns out is quite difficult, but what we really need is a nature positive test. How do we assess the nature impacts of a wide range of policies and spending decisions? That's even harder potentially. So we need to work with Treasury, finance ministries to create frameworks to systematise that kind of thinking. And we need much stronger incentives, both within government and of course within business, to incorporate natural capital into decisions and to hold them accountable for those decisions. But we can also use natural capital assessment tools to inform policy in other ways, like stress testing approaches, for example, that look at the economic impacts of different future natural capital scenarios on different sectors of the economy or parts of the country, and use that to inform an assessment of how to prioritise investment in natural capital to offset risks and maximise the returns on investment. And we produced a natural capital pilot test for the UK a few years back, and that was the precursor really to the global futures model, which does the same thing at a global level. It would be great if something like that was produced regularly to inform analysis both within government and the private sector at the national level, which could provide an input to firm level analysis, for example, being done under the Task Force for Nature-related Financial Disclosures, for example, or the Natural Capital Protocol. This stuff is all quite difficult and cutting edge, and it's been great to develop the thinking in discussion with the UK Treasury. But my final point is that we really need this kind of conversation going on globally, as not all finance ministries get the relevance of environmental issues to their economy. So in our response to the Dasgupta review that we published a months back, we called for the creation of a global commission for economy and nature that would really take forward the discussion off the back of the Dasgupta review results and findings, and provide evidence on the economic impacts associated with natural capital, and use it to engage ministries of finance so they see its relevance to them, to their future economic prospects, and to access to capital markets going forward. And we think this might be something that could really help to drive the uptake and demand for this kind of data globally. So I'll stop there. Thanks very much.
Thank you very much, Karen. Phil, I wonder if I could turn to you next. I mean, Karen made, I think, a very important point there that we'd be foolish to imagine that just producing data actually means it gets used for decision making, for policy purposes. But I'm also very struck that every time ONS publishes a new set of GDP estimates, it gets enormous attention, quite often dominates the news agenda for the day. Information about natural capital, the accounts have been published for a little while now, gets a bit of specialised attention, but on a much less scale, and very little evidence at the moment of people thinking about natural capital and what's happening to GDP together in the way I think that Partha was suggesting we might need. So that's a question in the back of my mind, but I wonder what your take is on this.
Yeah, thanks, Joe. Well, I mean, actually, I was going to just sort of start off with this idea that yes, it's actually the data is all well and good, but we do need clear communication. I mean, to address your point about GDP and natural capital accounting, I feel like it's a bit of a chicken and egg situation, because if until people are genuinely interested in the subject, the newspapers are going to be essentially writing pieces which will not be read widely. And now that we can really monitor the sort of readership of our articles, you're actually discouraged from publishing pieces which nobody reads. I mean, visible there. So it's a hard one. I mean, I write a column as well as report the news, and in the columns I've got much more freedom to explore analytically some of these subjects I've written about, this sort of stuff, and it does require a lot more these are complex issues, so it does require a bit of space to really get into them, especially if you're bringing people into the subject for the first time effectively. So those areas in the newspaper it works with. GDP is, because it's sort of part of the national vocabulary, we're effectively kind of duty bound to report it because that's what people want to read. So do we change the conversation, or are we just talking as part of the conversation? We do both at newspapers, but it's not as simple as if we just start running about natural capital accounts, we'll just get no readers, and then nobody's going to read it. So there's a bigger piece about communication. So I mean, on my sort of stuff on the communication I was thinking, we've ideas are not, if they're not communicated, they just don't cut through. And if they don't cut through, nothing happens. So the first thing I would start off with is just, we have to ditch the jargon if we're going to be talking to the general readers. Now I know so Partha has actually been very focused on this in his report. He's paid close attention to the language he uses. He talks about constructing he talks about constructing an economic grammar. He talks about a vocabulary that speaks to these sort of climate issues. And so his report is actually a good read. So that's the kind of thing which does help. It's not easy. It's easy to fall into jargon, especially in technical areas. So SDGs, GHG, CFC, COP, GGKP. I mean, all of these things are immediately put people off. And I struggle with acronyms and jargon, but I also am tempted to fall into them because they require less explanation. If you can just use a terminology, the general public don't know what you're talking about, but you know what you're talking about, and that's not enough. I mean, David Attenborough has been the biggest advocate for the natural world, not because he knows more than everyone else, but because he's such a fantastic communicator. So resisting jargon is the first and foremost thing, which I'd say for everybody involved in the area, all these specialists. Second, you need to be really clear about what we're talking about, and so we've seen this. Right now there's so many different terms for carbon neutral, net zero, there's carbon negative, carbon positive, there's net zero carbon, there's net zero GHG. What are we talking about? Mark Carney got it wrong recently. He was saying that Brookfield was net zero, but actually he meant it was carbon neutral. I mean, if he doesn't know what he's talking about, and he's the climate ambassador for the UK, I mean, there's not really much hope for the rest of us. So, I mean, we need to just have one term. We need to have simplicity as part of this process. It's enormously complex. It has to be sort of concentrated down into these simple presentational ideas. But I think that's absolutely vital. You see it with environmental and social governance, all this ESG investing. I mean, there you go, there's some jargon, but there's no science to these indicators, and partly because of the ability to just use jargon, you can start greenwashing. These asset managers can be greenwashing what they're doing. Corporates can be greenwashing what they're doing through just applying these labels to what they're doing. And we've got $40 trillion worth of assets under management now, which are ESG, which make you think the world would be greener than it's ever been, but apparently it's getting worse. So anyway, the UN system of environmental economic accounting, that is very encouraging. There are clear standards there. I think all this has to be complementary to GDP, because GDP is what we use. You can't just stop doing one thing and just go straight to the other. No one's going to pay attention. Joe, at the ONS, CPI is what we all use. It's for inflation. It's what is the key metric for inflation. But the ONS uses the CPIH number as their principal number. But we all go to the CPI because that's what's used. So CPIH, you can choose it, but it ends up being largely irrelevant. So there needs to be this sort of these clear decisions and clarity about what the intentions are behind the data. And I mean, in terms of how to cut through, it's always stories. It's always stories that cut through. Experts, and I get this, I totally get this. They never believe a story conveys the complexity of their subject. And I will write about some complicated thing, and I'll want to just get into the complexity of it, but actually will lose people. People will just not listen. So then there's no point in talking about it. When data can tell a good story, I mean, and it's about selecting. It's about selecting facts which sort of augment your points, and then just putting them in a sort of narrative context. So the World Economic Forum, like, it was about 5 years ago, they made headlines when they said that there would be more plastic in the oceans than fish by 2050. This was I know the WWF guys told me that this was a point just completely buried somewhere in a report. And one of their communications officials found this little data point and drew it out. And then it became the headline, and it became the entry point to get into all of the more complicated stuff. But you got to open the door to get people through. And that's the communication piece there, just finding these things which just can capture the imagination, and then you can get through it. In terms of the government, I'm coming to my final point now. In policy and all of these natural capital accounting points. You know, at the moment we've got the Treasury is facing proper GDP forecasts from the Office for Budget Responsibility twice a year. So, you know, it is held to account on the public finance outlook, you know, on whether productivity is improving twice a year. And they have to answer those questions. The government has to stand up in Parliament and answer those questions. They have to stand up in front of the press. They have to answer questions about why GDP is weak, why productivity is failing. You know, they do fiscal sustainability reports and fiscal risk reports. They have to publish responses certainly to the fiscal risk report. And again, this is looking, but these are now not looking just 5 years for the Parliament. These are looking 50 years into the future. So we do have a sort of framework where you can actually look way out, you know, proper sort of, you know, net zero climate change kind of timescales. And so my sort of thought is, why don't we have proper annual sort of environmental budgets, environmental accounts, which can be released either by the OBR, probably the OBR in a combination with some kind of environmental scientists, and these would be looking out 50 years, and you are, you know, measuring them against your carbon targets. So there's a carbon budget, etc., and the government can be held to account under its own, you know, independent institutions from their own forecasts. And we have a point every year to get the conversation going on this. We have a responsibility. The government has a responsibility to actually talk about this subject, and not just in a woolly way. Oh, we're giving X billions to green projects, blah blah blah. This is where you say you're going to be. You're not there on our forecast. How are you going to get there? That's what the public finance forecasts do twice a year. We need something like that, I guess, for environmental stuff. Anyway, I'll finish that.
Thank you very much. John, let me go to you, Chief Economist at the department in the UK, I suppose, most interested in this agenda, or at least together with a few other departments. But what would you like to see happen? How do you see the agenda going forward? And actually, how do you react to Phil's suggestion we turn the OBR into a Office of Budgetary and Environmental Responsibility?
Great, thanks, Joe. It's great to be here on this panel and part of this session. And thanks to Professor Partha Dasgupta for the report as well. So a few sort of reactions to that, to Phil's thoughts and Karen's as well. I mean, these are sort of probably my reflections on this. Of course, the government will respond in due course formally to the independent review, so I'm not going to prejudge that. But I mean, I guess there are a whole set of themes in here, aren't there, around I'm very conscious of trying to avoid some jargon now after Philip's statements. But there's something about the accessibility of this making part of the conversation, and something about then how does it play into decision making. So on accessibility, I think there is something around, as Philip's remarked and others earlier, GDP is a measure that's been with us for nearly 100 years now. So it's come, there's been a lot of development over time. We still talk about the weaknesses that it has, but actually it's had a lot of gestation. I feel we've come quite a long way on a lot of these measures in quite a short space of time. So I saw sort of Paul's presentation. If you look at those articles, I can remember the late Professor David Pearce probably put a lot of this sort of environmental economics, this measurement, in the mainstream in the 80s and 90s, and it's moved on, I think, quite rapidly in that period. We do now, of course, have the natural capital accounts that get published, and the Office for National Statistics lead that every year. DEFRA is heavily involved as part of that, and they have sort of increasing their scope over time. I think there's probably something around how do we continue to increase the profile of that, and part of that will be about us making those things accessible. But there's probably something about the national consciousness as well. So I think I'm right in saying, but others are probably more authoritative on this than I am. If you looked at the last election, how high environment was on the list of sort of concerns of the public, it had moved up a lot in just the course of one electoral cycle. So actually this does feel like it's something that's moved up the national consciousness. I mean, in terms of that accessibility and helping people to use these things a bit better, we at DEFRA have produced something, it's ENCA, there's a bit of jargon, but the idea is enabling a natural capital approach, and I may put the link in the chat in a moment. What this tries to do is say there are lots of different sources out there where people have tried to assess the value of a number of these environmental goods. How do we make these accessible for people? I mean, they're important to us within the department when we're thinking about these issues and policy decisions. They're important to people right across government, but they're important more widely, I think, for people making decisions, thinking about how they weigh those values. And of course, it sits within the framework, going to Karen's point around a decision-making framework, I think was the term that Karen used, around using the green book. So I think if you're a student of the government's guidance on how you think about policy, you can see in the various iterations of the Green Book how environment and natural capital has moved to be a much more central part of that process. A couple of final things, Joe, I can see you're keen to move us on, perhaps. A couple of final things. I mean, we've just embarked in DEFRA in piloting the next natural capital and ecosystem assessment, which will help us get at the sort of marine and terrestrial environment and how that's changed. But the last thing I wanted to say is that there is a UK and there's a global element to this. Professor Dasgupta's report is a global report. It's talking about a global issue here, just as Nick Stern did when he was talking about climate change. And there's work going on in a number of countries. I think the World Bank is doing a set of stuff here around actually trying to help us have a common language and framework for assessing those things. So they seem to like be the key areas to address that accessibility and then making sure it's part of decision making.
Well, thank you very much, John. I mean, I was thinking on reflection, it took, of course, about 40 or 50 years for GDP to assume its kind of central role. So perhaps we should be a little bit patient. On the other hand, one would hope that we might get this into the national debate in a bit faster time frame than 40 or 50 years. So we should probably do better than GDP did if we possibly can. I'd really like to continue this conversation, but I think given the constraints of time, and just to give time for a few questions at the end, I should probably leave the discussion there. But I picked up a number of points from all three of you that I'll certainly think a lot more about. I particularly like the idea of the Office to budget and environmental responsibility. I think that's definitely worthwhile taking forward, as indeed some of the comments in the chat have also suggested. But thank you very much indeed. And Tera, maybe this is the point I should hand back to you.
Thank you very much, Joe, indeed, for that really interesting panel and some really excellent practical ideas there in terms of how to take this forward, how to get it to be more broadly recognized, how to get it into practice. My first question is actually still for wait, I'm just trying to check. Yes, John Kernow from DEFRA. There's one question here about guidance, and you mentioned that the Green Book has moved forward and basically the various different guidance that exists at DEFRA and DFT and other places now increasingly takes these issues into account and certainly follows the kinds of thought that Sir Partha was discussing at the very beginning in terms of looking at the net present value of policies against the counterfactual. What's your sense of the degree to which this is actually applied across government? So if you would take a random department that may be not that close to environmental issues, will they, let's say BASE, I guess they have energy, but if they're looking at, let's say, a small business subsidy scheme, would they have in their mind to actually take that very broad view across all of the different types of capitals and values that different government interventions and expenditure can bring about.
Yeah, thanks, Tera. Well, I think we've, as I say, we've got the guidance there, and the important thing is also the Green Book kind of mandates the sort of things you should be thinking about as part of this. So I think one of the things we do with other government departments is we spend, you know, a fair bit of time going around and talking about these methodologies to help departments do that, though the responsibility will be for a department themselves to do that. And it probably goes to the point about making it accessible and making it more easy to use these sets of things, because we're not all going to be experts in this stuff. But if you take, you know, Tera, take the example I think you talked about a little bit about earlier, which is the, you know, the shadow price of carbon. What we've got there is we've got something that's quite accessible. We spend quite a bit of time in government sort of helping people know how they should apply that, and that means that though you may not be the government expert in this area, you can actually take that tool and use it when you're undertaking policy appraisal. And of course, the key thing then is actually you put those sort of costs and benefits alongside the other costs and benefits. As you say, the policy itself may not be targeted on environmental goal, but actually understanding those costs and benefits alongside the others is the key thing. So I think we do quite a lot on it. I think the Green Book, as the sort of guide for government, helps make sure that departments are well aware of it.
Thanks very much, John. So there's a question that's come up a couple of times already throughout the session, which I thought I would ask Sir Partha and also Paul Ekins to come in on, which is around trade-offs. How can you use this kind of framework to make trade-offs, for example, between natural capital, human capital, economic capital? I would love to hear anybody's thoughts on that, but maybe we start with you, Paul.
Yeah, well, thank you very much. I mean, the whole purpose of giving monetary valuations to goods, capital, ecosystem services is in order to inform the issue of trade-offs. And it's extraordinarily difficult to make these trade-offs if you haven't got a common numeraire, a common currency. And that's why these things are given monetary valuations. Now, I've long been much more in favor of what's called the position of strong sustainability, which is to recognize that there are environmental thresholds that should not be transgressed. And in the academic literature, this is increasingly found in such concepts of safe operating space or planetary boundaries. And rather than operating there in the world of trade-offs, what you're saying is that there are certain things we don't do because we simply don't know enough, and we are afraid that there might be bad stuff around the corner. And obviously, the most obvious example of that is the Paris Agreement climate targets, where the world as a whole has said it doesn't want to exceed 2 degrees and would much rather be closer to 1.5. We're not doing very well in meeting that, I have to say, but nevertheless, that is a pretty clear statement. And the whole planetary boundaries discourse is to try to interpret these various environmental issues about which we are still so ignorant. And we started, remember, by thinking about the amount of data that we didn't have, about which we're still so ignorant, and just recognize a little bit of humility that humans need to temper their widest ambitions in order to ensure that we don't actually fundamentally destroy the planet on which we live. And so those two things, I think, go together. You can operate for some of the time in trade-off mode, using these monetary valuations and social costs of carbons and the like. On the other hand, you'd be well advised in many environmental situations actually to use the concept of the guardrail, which you yourself used just now, Tera, and recognize that there are environmental thresholds that we don't want to pass.
Thank you very much, Paul. That's very clear and also very useful as a framework, I think, for policymakers to have those two different lenses, one being a little bit more short-term and the other one being very much long-term, and much more bounded in terms of what makes sense to do. Now, another dimension of this question, I'm wondering if Sir Partha is still available, but if he's not, then maybe one of you would volunteer to answer.
Can you hear me?
But I can't see you on my screen. I can see you, I can hear you, but I can't see you. It could be my screen is also doing something weird here.
Either, but never mind.
If you, yes.
I have been here.
Great. So a critical question that
sorry,
has
are you
come
asking me a
up,
question?
maybe
Share my webcam. Okay,
yes, I was going to ask you a question, a new one. There you go, okay. Wonderful. And maybe if you have some thoughts to add to that question about trade-offs, then feel free. But there's also here a question about intergenerational equity. And of course, this idea of calculating stocks and changes in stocks very much is the whole point of it, is thinking future forward. But I guess there are some practical issues there as well in terms of how do you value today's versus futures populations and individuals, and even whether you give different values to different people, which I'm not suggesting, but there have been some questions about that. So interested in how the Dasgupta review came out on that question around perhaps discount rates, and how to think about intergenerational.
Sorry, the latter questions you've asked are very much discussed in the review about intergenerational equity. But I'd like to just extend Paul's remarks, because I thought there was a really fascinating discussion between you all, Karen and Philip and Paul, and I think we can get somewhere. I think we talk about inclusive wealth, but that's a goal. And the reason we want to have a goal, an ideal system, is that we then have a tight language, and we know that we'll never get there. And we shouldn't even aspire to, actually, because it'll be a waste of time. What we want to do is to back off from the goal and cut corners every time we feel it's not worth going further. But the great advantage of having a tight theory, mental framework, is that you know where the what corners you're cutting. Otherwise, it all becomes ad hoc. Now, I think the natural capital valuation, there is nothing preventing us, at least as I see it, from having a record of stocks. Break the ecosystems of the UK, for example, into a class of stocks. Ecologists have plenty of, tons of stuff in which we can classify different types of ecosystems, and keep a record of their physical state moving over time, publishing it in parallel with GDP. Now, no monetary valuation. I'm talking now about stocks, the health of it. The health of the peatlands, for example. There are indices for that, and it could be even just verbal description of carbon content, for example. Now, if you have data on stocks and you're taking time series and you're reporting in with life expectancy data on education data, GDP data, that kind of data that are available these days, you're going to get implicitly trade-offs. You'll be seeing, it's a much more, sorry, I'm taking Philip's stance now. It'll be so much more dramatic to say, well, yes, we are 2% richer than we were so many months ago or so many years ago. We have so many more cars, we have so many more of this, but at the same time, we have less of this, less of that, in quantitative terms, no monetary terms. So the question of valuation doesn't arise, you sort of suppress that. Now, why are we interested in doing it that way? We are doing it because each of these is going to be a component of inclusive wealth. But we can't aggregate because we haven't got the prices. Never mind, it's not a reason for throwing up one's hands and saying we can't do anything. We really need a picture of our natural capital stocks. That's the key thing. And it's important to look at the stocks. And then the flows follow from that. Of course, there may be a difference of opinion about the flows because these are interacting systems. Okay, that's for sure. But stocks are very, very dramatic. How many? What's the density of bees in a forest? That kind of thing have a visual as well as a psychological impact. Now, I was really taken by Philip's observations because I think that's the way to go for it. It's not inconsistent with anything that the review says, because in fact, review points to having to take shortcuts. Then really, the deal is what kind of shortcuts should we take? About intergenerational equity, again, I have a feeling we perhaps overdo it. We over worry about it, largely because people care about their children. I mean, it's embedded in us. So where we are going wrong is the fact that we don't care very much about other people's children, and other people don't care about one's own children. That's the externality which is causing the difficulty. It's not as though we don't care about the future. It's But the final thing I'd like to mention is there's one thing which we systematically underestimate in government decision making, which is it's a standard practice in cost benefit analysis when projects come up for appraisal to assume that the relative prices will remain constant over the lifetime of the project. It's a simplification, but every project report that I've seen assumes that there'll be after the gestation period is over, there'll be a constant flow over a 20-year, 30-year period. Okay, and then of course, then you apply some discount rate, even as low as 3%, is going to hit against natural capital projects because the gestation period for natural capital can be long. Okay, slow growing forests essentially get the biggest beating because nobody wants to wait for trees to grow at such a slow pace. The problem is that because we are eating into natural capital, one thing we do know, and the extent to which we are doing it relative to the accumulation of produced capital and human capital, the relative price of natural capital to the others is going to be rising and is been rising. And therefore, in cost benefit analysis, when you take natural capital into account, the relative price of natural capital should be assumed to grow relative to your numeraire good. And by numeraire, I mean consumption. Okay, and that's the jargon. I'm trying to avoid jargon. Okay, because we use. So if you do that, then in effect you're giving it possibly even a negative discount rate, applying a negative discount rate on the natural capital component of your project. Because if its price goes up at a faster rate, relative price goes up at a faster rate than the rate you're using to discount in your numeraire good, then that's in effect a negative discount rate. So I don't worry too much about the intergenerational equity issue because there's tons of stuff on it. And I'm not sure we've learned an awful lot. Whereas there are some immediate things we can do to correct the practices, recognizing that the logic of natural capital degradation means that natural capital will be rising in value, no matter what that value is. We don't know whether it's 2%, 3%, 4% or not, but we do know that it's rising. And you could do sensitivity analysis in principle to defend the fact against the economist argument that where's the economic rationale for investing and risk in natural capital? Well, there is one, which is that it's going to become more and more valuable. And so the discount rate on it should be lower.
Thank you very much. That's a really important note, probably to end on, given that we are coming to the end of the time that we had allocated for the seminar. It sounds to me like all of you have been saying, don't let the best be the enemy of the good. There's enormous progress that's already been made. There's enormous progress that still needs to be made, both globally and in different countries and in different organizations. But by communicating this information and the concepts clearly, we really can start having a much more informed discussion and debate and start getting into decision making as well. So all that remains for me to say is, first of all, thank you so much to Jessica Burns at the GTKP, Nathan Birch and Caroline Lewis at the ONS for helping us with the organization, to all of our speakers and panelists today who have been amazing and incredibly informative, and I've certainly learned a lot. If you would like to stay tuned to the events that the Economic and Statistics Working Group is organizing over the coming months, then you can sign up with economic.engagement at ons.gov.uk. We'll put that on the website as well after the call. And then I think that's it. I hope you've all enjoyed it as much as I have. I hope you all go off to have a nice evening, and thank you very much.
Thank you.